Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourself, Banking and General Knowledge, etc. Today I am going to discuss about Reserve Bank of India's new rules for current and OD accounts from April 2026. In this video, we are discussing the Reserve Bank of India's new and amended guidelines on current accounts and overdraft accounts notified on 11th December 2025 and effective from 1st April 2026. These revised rules introduce important changes based on banking system exposure, especially for businesses having rupees 10 crore or more exposure across banks. Through this video, we aim to explain the key provisions, eligibility criteria, collection account concept, exemptions, compliance requirements, and practical impact of these RBI directions in a simple and structured manner. This content is particularly useful for business owners, banking professionals, credit officers, auditors, and finance students who want a clear understanding of how these new rules will affect business banking operations. Please watch the video till the end to understand what actions businesses and borrowers should take before April 2026 to ensure smooth compliance with RBI regulations. The Reserve Bank of India (RBI) has issued comprehensive amendments to credit risk management rules that will significantly impact how businesses maintain current accounts and overdraft facilities. These changes, announced on December 11, 2025 by RBI circular, will come into effect from April 1st, 2026. If your business has borrowings of rupees 10 crores or more from the banking system, these new rules will directly affect which banks can maintain your current accounts and overdraft facilities. Key changes at a glance. The RBI's Amendment Directions 2025 introduced a tiered framework based on total banking system exposure. The central change revolves around a rupees 10 crore threshold that determines account maintenance eligibility. What is banking system exposure? For these rules, banking system exposure includes all sanctioned fund-based and non-fund-based credit facilities across all commercial banks, including small finance banks, local area banks, and regional rural banks, urban cooperative banks, and rural cooperative banks. Payments banks are excluded from this definition. Rules for businesses below rupees 10 crores exposure. Good news for smaller businesses. If your total exposure to the banking system is less than rupees 10 crores, you can maintain current accounts or overdraft accounts with any bank without restrictions. This means business as usual for most small and medium enterprises. Rules for businesses with rupees 10 crores or more exposure. When your banking system exposure reaches or exceeds rupees 10 crores, new restrictions apply on which banks can maintain your current and overdraft accounts. Eligibility criteria for banks. A bank can maintain your current account or overdraft account only if it has A. At least 10% share in the banking system's total exposure to your business, or B. At least 10% share in the banking system's total fund based exposure to your business. Special provisions. When no bank meets the criteria, if no bank meets the 10% threshold, on only one bank qualifies, the two banks with the largest exposures can maintain your accounts. Single lender scenario. If one bank has exposure to your business, you can choose one additional bank for maintaining accounts, provided you obtain a no objection certificate from your existing lender. Scheduled commercial bank preference. If you want a current account with a scheduled commercial bank but none meets the eligibility criteria, you can open an account with any SCB of your choice, subject to obtaining NOCs from all your existing lenders. Understanding collection accounts. Banks that don't meet eligibility criteria can only maintain collection accounts for affected borrowers. What is a collection amount account? A collection account is a restricted current or overdraft account primarily used for receiving cash inflows. The key restrictions include 2-day remittance rule. All funds credited to a collection account must be transferred within 2 working days to a designated account, your main current account, cash credit account, or overdraft account with an eligible bank. Limited debits allowed. You can only debit statutory dues like taxes and any dues to the bank maintaining the collection account before remitting funds. Overdraft restrictions. If your overdraft account becomes a collection account, any overdraft disbursement can only be made through your designated account. Cash credit accounts remain unrestricted. The new rules do not place restrictions on cash credit accounts. Banks can continue providing cash credit facilities as per customer needs, recognizing that cash credit accounts are working capital facilities linked to current assets and operationally different from current accounts. Important exemptions. Certain accounts are exempt from these restrictions. FEMA related accounts. Accounts opened under the Foreign Exchange Management Act 1999 and related notifications remain unrestricted. Statutory and regulatory accounts. Accounts required by statute or specific instructions from financial regulators like RBI, SEBI, IRDAI, or PFRDA or government authorities are exempt. Regulated entity accounts. Accounts of entities regulated by financial sector regulators used for carrying out their regulated activities are exempt. Important note, even for exempt accounts, surplus funds must be remitted to designated accounts and banks must ensure transactions serve only permitted purposes. Product specific current accounts. Banks can maintain current accounts for specific products or services that inherently require transaction routing even if they don't meet the 10% exposure criteria. However, strict conditions apply. A. Must be approved by the bank's board with detailed justification. B. Limited to specified purposes only. C. No cash transactions, customer discretionary debits, or issuance of cards or checkbooks. D. Surplus funds must be remitted to designated accounts. E. Strong safeguards against misuse required. Prohibited activities. The new rules explicitly prohibit certain activities. No third party pass through transactions. Accounts cannot be used as channels for third party transactions except for entities specifically licensed by financial regulators to facilitate such transactions. No unauthorized deposit taking. Account holders not licensed by RBI cannot accept deposits or provide payment services through their accounts. Account usage restrictions. Banks must ensure that accounts are used only for authorized business activities related to the account holder's actual business operations. Compliance and monitoring requirements for banks. Regular monitoring. Banks must monitor accounts at least once every 6 months to ensure ongoing compliance. CBS flagging. All accounts under these rules must appropriately flagged in the core banking solution for clear identification and effective monitoring. Borrower level monitoring. For customers with multiple accounts, banks must monitor at both account and borrower levels. Transaction monitoring systems. Robust systems must detect prohibited usage, including unusually high transaction volumes, frequent pass through activities, and inconsistencies with stated business activities. When eligibility changes, if a bank becomes ineligible to maintain a current or overdraft account due to A. Increase in customers' banking system exposure beyond rupees 10 crores, B. Changes in the bank's exposure share, C. Non-availability of NOC from lending banks, the bank must A. Notify the customer within 1 month of observing ineligibility, B. Complete account conversion to collection account or closure within 3 months. Best practices for term loans. The RBI recommends that term loans be remitted directly to the intended beneficiaries' accounts or for specified end use rather than routing through the borrower's account where the beneficiary is identifiable. Implementation timeline, effective date April 1st, 2026. Early adoption, banks may choose to implement these amendments earlier than the mandated date. What businesses should do now? Assess your exposure. Calculate your total banking system exposure across all lenders to determine if you fall above or below the rupees 10 crores threshold. Review bank relationships. Identify which of your banking partners meet the 10% exposure criteria for maintaining current and overdraft accounts. Plan for collection accounts. If you have accounts with banks that won't meet eligibility criteria, prepare to designate your main transaction account and understand the 2-day remittance requirement. Update loan agreements. Work with your lenders to include any additional convenience they may require under their policies. Review third party transactions. Ensure your accounts are not being used for unauthorized third party pass through transactions that could violate the new rules. Communicate with banks. Proactively discuss these changes with your relationship managers to ensure smooth transition. Impact on business operations. For most businesses below the rupees 10 crore exposure threshold, these changes have minimal impact. However, larger businesses with multiple banking relationships will need to A. Consolidate transaction accounts with eligible banks, B. Manage collection accounts with 2-day transfer timelines, C. Ensure compliance with the new restrictions on third party transactions, D. Adapt to potential changes in banking relationships as exposure shares fluctuate. Conclusion: the RBI's new framework for current accounts and overdraft facilities aims to strengthen credit discipline and improve monitoring of fund utilization. While businesses with lower banking system exposure face no new restrictions, those with rupees 10 crores or more in exposure will need to carefully navigate the eligibility criteria and collection account requirements. The 6-month implementation window until April 2026 provides businesses adequate time to assess their situations, work with banks on compliance, and make necessary adjustments to their banking arrangements. Stay in close communication with your banking partners as they prepare to implement these changes and consider seeking professional advice if your business has complex banking relationships that may be affected. Disclaimer: this video is prepared purely for educational and informational purposes. The discussion is based on the RBI's circular dated 11 December 2025 and related regulatory instructions are as available in the public domain. The content shared here does not constitute financial, legal, or professional advice. Viewers are advised to verify the latest RBI circulars, notifications, and bank specific policies and consult their bankers, chartered accountants, or legal advisors before taking any decision based on this information. The creator of this channel is not responsible for any loss, action, or decision taken by the viewers based on the interpretation of this video. RBI guidelines are subject to amendments, clarifications, and bank level implementations policies from time to time. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.